Good afternoon, ladies and gentlemen. Thank you for joining us today for this earnings call to discuss our results for the second quarter ended 30th September 2018, which we announced yesterday. Present with me on the call today are Gopal, Raghu, Jaideep, Badal, and Komal. Let's start with the top themes in India's telecom industry during the quarter. The industry table continued to decline this quarter as well, and current telecom spend in India at approximately 0.7% of nominal GDP is amongst the lowest in the world. The size of the industry, which at its peak was around 45,000 crores a quarter, is now approximately 30,000 crores each quarter. The good news, however, remains that there is a massive demand for telecom services and usage parameters continue to rise, with an average data user on a network alone using over 9 GB per month. The role of the smartphone for the new customer of today is more than just a connection. It's a convergence of connectivity, entertainment, trade, education, banking, and this demand will only continue to increase. This, coupled with the structural repair of the industry, which we are now seeing with a 3+1 operator structure, bodes very well for the long-term opportunity. However, equally we believe that in order to allow operators to undertake massive network investments and provide right quality of services, pricing needs to move up to ensure industry viability. The macroeconomic factors remain favorable in Africa during the quarter, with increasing prices of crude and commodities, which are helping the overall market growth, and this augurs well for the telecom sector there. In order to execute brilliantly in the market, we have a simple 5-pronged strategy. First is to win the 4G game decisively. This is crucial as India transforms to 4G. Starting this quarter, we have further heightened our disclosure to represent the 4G-only customer additions, and we are happy to state that we've added over 7.5 million 4G subscribers on our network. Each month, India ships around 10 to 12 million smartphones, with about 8 to 9 million being actual device sales for upgrades. Within this, we feel we are getting our fair share of our 4G net adds. We are also seeing good traction led by smart participation in device play, both via our own platform as well as strategic alliances. In order to drive upgrades of our user base, Airtel has launched one of the most attractive cashback offerings for the existing customers on buying a new smartphone. Our device portal continues to do well, and in this quarter we further expanded our devices by offering the latest iPhone models. Through an expansion of the models across price ranges, coupled with expansion of credit and logistics partners, we are hopeful of creating a truly compelling proposition of ensuring device affordability for our customers. We are confident that these initiatives will continue to accelerate the smartphone adds on our network and render us as the network of choice for 4G. The second plank harbors around winning with brilliant network experience. High-speed networks have to be the backbone of any operator, and this quarter was no different in our quest of network transformation. In line with our stepped-up deployments, we deployed over 27,000 mobile broadband BTSs. We are happy to state that as per Ookla, the global leader in speed test, Airtel continues to be the fastest mobile network in India. This is the fourth time in a row that Ookla has rated Airtel as India's fastest network. The third plank being building new revenue streams. In line with our philosophy of being an open telco and working with multiple partners on our platforms to be able to provide widest content choices to our customers, we strengthened our product portfolio this quarter with a multitude of alliances and partnerships. We added Netflix, ZEE5 and NDTV Hop to our already wide base of content choices. While the Netflix partnership allows for 3 months of free trial only for Airtel customers, the ZEE partnership allows for access to select premium original series and movies from ZEE5 exclusively on Airtel's digital properties like Airtel TV. All these partnerships enable our customers to enjoy a superior and differentiated content experience. We also launched Airtel Thanks, our biggest digital program to delight our valued customers with exclusive benefits. Under this first-of-its-kind program, all Airtel customers who commit a monthly ARPU of ₹100 and above will receive exciting additional benefits at no extra charge. These benefits will include access to premium digital content, great offers on smartphones, and online shopping vouchers. This program also gives the brand the ability to engage with a vast base of smartphone customers. By leveraging its deep customer insights, Airtel will work with partners to co-create custom-made offerings for Airtel customers. We have received very enthusiastic responses from our partners and look forward to building Airtel Thanks into a large-scale telco brand collaboration property. Fourthly, winning with war on waste. Cost efficiencies is a company-wide focus. While other cost lines have been largely flat, network costs have seen some increases in this quarter due to macro factors, including the hike of diesel due to the weaker rupee. We remain confident to drive synergies and be the lowest cost operator in the country. Let me now turn to our Africa operations. Airtel Africa witnessed steady improvements across top and bottom lines on the back of the twin engines of data and mobile money, underpinned by strict cost controls. On a constant currency basis, revenue grew over about 11% year-on-year, net revenue at a higher 13.2% year-on-year. The EBITDA growth was 24% year-on-year, with EBITDA margins at a high of 37.1%. While this quarter saw an impact of forex fluctuation in Zambia, we are pleased to state that despite the additional servicing of acquisition interest, Africa is back positive for the third consecutive quarter. We are also very pleased to state that starting this quarter, we are providing detailed information on our Africa operations. The supplemental Africa pack within the quarterly report contains the segmental financials and operational KPIs of our three main regions, Nigeria, East Africa, and rest of Africa. Further, product-wise details, namely mobile and Airtel Money, have also been provided separately to give a full picture of the Africa business. You will see for yourself that in each of these operations, our businesses are growing faster than the markets and are very well positioned to create long-term sustainable shareholder value. Equally, we are pleased in line with the highest standards of corporate governance, our Africa disclosures are also best in class. We feel that our Africa business has a very strong investment rationale underpinned by our unique portfolio of presence in high-growth markets. With organic and inorganic growth, we are now leading the operators across most of our markets, with either being a number one or number two position across. We have continued to invest ahead of the curve, be it in networks, distribution, IT, people, and with solid growth, the operating leverage of the model is playing through. Our superior execution capabilities are demonstrated in Africa as we win with more customers with a strengthened distribution model, driving data growth through mobile enterprise and home broadband, and the expansion of Airtel Money, where throughput has increased over 30% year-on-year to about $6.2 billion this quarter. Our enhancement of the consumer experience via network modernization has led to a rollout of broadband sites, which continue during this quarter, and we have over 15,200 mobile broadband towers with over 26,300 mobile broadband base stations. We now offer U900 in 10 opcos and LTE in 10 opcos as well, with plans for launching in the balance soon. The numbers demonstrate that this business has continued and entered a sustainable positive cash flow era, and that the investment rationale 8 years ago with which we entered Africa is as valid today. On the regulatory front, in India, the Honorable Supreme Court has disallowed Aadhaar KYC-based mobile SIM verification for mobile connections. Airtel is awaiting the Department of Telecommunications instructions on the way forward. In Africa, tax on mobile internet and money in a few key markets impacted the industry in some of our large markets. Moving on to an update on fundraising. We are pleased to announce that Airtel Africa Ltd, a UK incorporated subsidiary of Bharti Airtel, announced that 6 leading global investors comprising Warburg Pincus, Temasek, Singtel, SoftBank Group International, and others have agreed to invest $1.25 billion through a primary equity issuance in the company at a post-money equity value of approximately $4.4 billion. Airtel Africa has seen a turnaround of its business in recent years, and this investment demonstrates the confidence of leading global investors in the company's ongoing robust growth and profitability. The investment also reinforces the increased growth potential of the African telecommunications sector. The proceeds will be used for deleveraging and for growth of the operations. Airtel Africa subsequently intends an IPO and use the proceeds primarily for further reduction of debt. As regards Tata, we are currently in the final stage of hearing with the NCLT, and post receiving NCLT approval, we will approach DOT. On Indus Infratel, following the CCI and SEBI approval, the merger petition has been filed with the NCLT. Moving on to our financials. Consolidated revenues came in at INR 204.2 billion, which is an underlying year-on-year growth of 0.5% adjusted for the IUC. Pricing pressures in mobile India continues, even as Africa continued to grow strongly. Consolidated EBITDA of rupees 63.4 billion during the quarter a decrease of 14.7% on an underlying basis, mainly due to OPEX headwinds on account of higher network costs as we aggressively roll out networks in India. Africa organic EBITDA at constant currency at USD 305 million is up 24% year-on-year. We remain focused on structural cost containment through our War on Waste program, and we continue to look for avenues of further cost rationalization. Depreciation and amortization expenses were at rupees 52.3 billion, which increased due to the impact of sustained capex spends aimed at enhancing our 4G capacities. Net finance costs for the quarter were at rupees 29.8 billion, mainly due to the higher interest charges and forex losses stemming from the rupee weakness and the appreciation of the euro and the depreciation in the Zambian kwacha this quarter. From a standalone basis, the dollar exposure on the India books is only $1.5 billion. Hence, we are well cushioned from an adverse rupee movement. The company recognized an exceptional gain during the quarter, largely on account of creation of a deferred tax asset in our DTH business, partially offsetting the charge towards network refarming and upgradation during the quarter. Net income post exceptional items came in at rupees 1.18 billion. Capex at rupees 76.8 billion is slightly front-loaded, even as we continue to maintain our overall guidance of rupees 270 billion for the full year. To enable our spend, strengthening our balance sheet and focus on debt reduction remains key priorities. Net debt during the quarter was INR 1132 billion, which increased due to additional debt undertaken for funding the OCF shortfall and higher capex this quarter, as well as the adverse effects causing a translation impact. With the Airtel Africa primary issuance, the proceeds of which will be used to leverage, this figure will come down further. To sum up, with pricing softness continuing, India's telecom industry is fast consolidating and witnessing a huge expansion in data and voice usage with the move towards bundled offerings. With our scale and efficiencies, backed by a superior spectrum and network footprint, we continue to hold and drive market share leadership. Finally, our focus of strengthening our distribution model and enhancing consumer experience in Africa is leading to profitable top-line growth. With that, I hand you over to the moderator.
Thank you very much, sir. We will now begin the question and answer interactive session for all the participants who are connected to the audio conference service from Airtel. Due to time constraints, we would request if you could limit the number of questions to 2 to enable more participation. Hence, management will take only 2 questions per participant to ensure maximum participation. Participants who wish to ask questions may please press star 1 on their touchtone enabled telephone keypad. On pressing star 1, participants will get a chance to present their questions on a first in-line basis. To ask a question, participants may please press star 1 now. The first question comes from Mr. Manish Adukia from Goldman Sachs, Mumbai. Mr. Adukia, you may ask your question now.
Yes, hi, good afternoon, and thank you for taking my questions. My first question, if you can just talk about state of the India wireless industry at this point in time. What are the trends that you're seeing for different customer segments, and what is your outlook for the industry over the next 1 to 2 years? Second question, Jio seems to be garnering a meaningful share of the feature phone market. How are you looking to stem the erosion of subscribers and revenues in that segment? And on similar lines, what is your outlook for your DTH and home broadband businesses given potential for competition in these segments in the near term? Thank you.
Manish, this is Gopal. So I think if you look at what's happening, firstly, let me just talk about our own business. We have about 330-odd million customers on wireless. But if you look at, the pattern of consumption across the base, you find that there's a very large number of customers, some of whom we acquired from Telenor and some that we have ourselves, about 100 million customers with very low levels of ARPU. So these ARPUs are at sort of low double digit. Now, one of the big moves we made in the last 1.5 months is really in 3 circles in Tamil Nadu, UP West, and Punjab, where we moved in with minimum ARPU-led plans at the low end. So we really dramatically simplified tariffs to just 7 tariff plans and introduced these 3 minimum ARPU-led plans. This is something that we've seen some good results in. and we're now rolling this out across the country. In fact, in the last 7 days, we have already rolled out across the country. So if you see tariffs now, they've brutally simplified to 7 or 8 tariffs with minimum ARPU plans starting at 35 rupees. So that's on one side of the market, which is at the lower end. Then there's a second segment, which is in the prepaid segment, which is the high-value prepaid segment, largely smartphones. And this is where we believe that we really need to step up our act to actually win with 4G. There's a dramatic move that's taking place between feature phones and 3G phones to 4G. Today, if you look at our 3G devices and the contribution of these 3G devices to our overall revenue, it's almost negligible. So we could very soon see the demise of 3G as a technology. And then there is postpaid, which is the real high end, where I think we've been holding our shares and we continue to do pretty strongly. While the revenues on that segment have been under pressure, that's largely because of the downtrading and the movement into lower ARPU plans. I think we're holding the customer base. Our churns are quite low, and we believe that that segment, if we are able to hold, at some stage the ARPU could lift there. Now, in order to meet these three sort of broad segments, which is the low end, which I think will probably shrink, so you could expect some shrinkage of our low-end customer base as we move to minimum ARPU plans. Dramatic growth of prepaid on 4G, and of course the postpaid segment. I think there are a few things that we are looking to do. Number one is really refarming our networks to L900. So the 900 band is going to 4G. So in a way, GSM on 900 will pretty much be done literally in the next 3 to 4 months. Like I said, 3G networks will get sunset very soon, and rapid focus on VoLTE to actually drive VoLTE growth. So that's as far as the overall wireless business is concerned. From our perspective, one of the big programs that Nilanjan referred to is our Airtel Thanks, which is really about serving our loyal customers who give us an ARPU 100 and above, and then trying to drive and upgrade them onto higher-end plans given the low levels of pricing. And this is where we're using content through partnerships with Zee, Netflix, and Amazon to actually try and upgrade them. So I would say that if you look forward a couple of years, I think we should probably see growth in the postpaid segment. We should see at the lower end, the 100 million customers are giving us low single-digit or double-digit ARPUs compressed further by 30 to 40%, and an ARPU upside there. And on the middle end, almost all customers will start sort of moving to 4G. We have chosen not to yet compete in the VoLTE feature phone space because we believe that there are customers already who are using our networks on feature phones. So our focus would be to actually get them to upgrade directly to smartphones. Finally, as far as DTH and home broadband is concerned, on the DTH side, I think that business continues to look good. There still is a big opportunity to upgrade from terrestrial and cable. On home broadband front, we've rolled out almost 1 million home passes in the first half of this year, which is equal to the entire rollout that we had last year. So we have stepped up our home broadband, home pass, our expansion. And we're now beginning to see some growth in net adds. This quarter has been a little bit better than prior quarter, though we saw some ARPU dilution because of the pricing arbitrage that there is and the adjustment as a consequence that we have had to do on the broadband front.
Thank you, Gopal, for the detailed response. If I can just ask one quick follow-up. So I know this question keeps coming up on every quarter's call that Jio subscriber addition just on the smartphone side still continues to be much ahead of what Bharti is doing, despite Bharti doing a lot of capex, and network still remains very good, like you mentioned, but their subscriber addition still remains very, very strong versus yours. So what do you think is driving that divergence in subscriber addition trends, and how soon do you think that gap could potentially be closed with Reliance Jio?
I think we have seen a growth of about 7.5 million 4G net adds this quarter. It's a little lower than the quarter that went by, and that's also partly on account of the seasonal effect that we've experienced. We're not competing in one end of the market, which is the VoLTE phone, the feature phone. So we're really competing only on the smartphone side. If you look at our performance, I would say in the top 1,000 towns, I believe that we are actually doing, we're adding the most amount of customers. In rural areas, we're still under-indexed, and this is beginning to shift as our networks are rolling out. In fact, if you look at our 4G footprint, that is getting to about 150,000 sites. We added about 25,000 sites in this quarter, and as we roll networks out, we find that our share of 4G net adds in those particular geographies takes a bump up. So it's, there's a direct correlation between our rollouts of our network and the performance in 4G, which is why, for example, in markets like Karnataka, where we have rolled out much in advance, we're getting more than our fair share of 4G net adds. So I think there's a clear correlation between the network rollout and the performance on the smartphone front.
Sure, that's helpful. Thank you, and all the best.
Thank you very much, Mr. Adukia. The next question comes from Mr. Sachin Salgaonkar from Bank of America, Mumbai. Mr. Salgaonkar, you may ask your question now.
Hi, thank you for the opportunity. My two questions are, first question is on EBITDA margin at India Cellular. Clearly, it was pretty low at this quarter at 21% when we look at the trend what we saw in the past. Just wanted to understand, are there any one-offs in this, or is this more like a steady state? And Nilanjan, again, I did hear on the war on the waste, but by the looks of it, the SG&A continues to remain high for not only this quarter, but even last quarter, was a bit high. Second question was on any change in strategy you guys are looking at, more like a fiber to the home market, post-Reliance acquisition of Den and Hathaway. Given that this market perhaps has a little bit more potential and now, perhaps one operator is trying, wanted to understand how you guys are looking at it. And sorry, Gopal, a follow-up question on, your comments on the previous question. Are you saying that GSM in 900 in next 3 to 4 months will be completely shut down for Bharti?
So I think that it, depends, Sachin. It depends on the spectrum that we have. If you look at, for example, markets like Karnataka, where we have about 8.8 megahertz of 900, there will be a small slug of spectrum that will continue to be run on GSM. The same would apply for markets like Andhra or Northeast or Assam. In the case of Delhi, we have only 6 megahertz of 900. So there the movement could be a little bit more rapid. But we are, over a period of time, the best spectrum, which is the 900 band spectrum, we believe will go to serve 4G customers rather than 2G. And by and large, we will operate with 1800 grade networks as far as GSM is concerned. Like I said, there will be a transition plan for this, and it would vary depending on the circle, and that is a function of the extent of 2G revenues that we derive from the circle. On the FTTH market, I think, like I said, we've rolled out aggressively fiber to the home, 1 million home passes in the first half. We will continue to roll out aggressively in the second half. We're also looking to step up our investments on home broadband in the following year, and we will be open to looking at other partnerships to expand our home presence through other entities that may have access to the last mile. So that's still speculative.
Hi, Sachin, Badal here. On the EBITDA margin for mobile business, we are at around 21%, and that seems to be a steady state as of now. Except for network expenses, almost all our other line of expenses have been kind of flat. Despite us going aggressive on content, we have been able to manage our other lines of expenses to offset the increase in content expenses. Network expenses has increased this quarter. Primarily, it has been led by 3 or 4 broad reasons. One, we have almost doubled the incremental new sites which we have rolled out this quarter, close to 3,700 odd. The number of base stations which we added were 27,000 versus 22,000 in the previous quarter. That has an impact. Diesel, almost, as Nilanjan mentioned in his opening speech, went up by close to 4 odd rupees for the entire quarter. And that had a fair amount of impact on our numbers. And apart from that, we have had some increase because of Voda Idea exiting certain sites. So they're having some increase on account of that. But ballpark, EBITDA margin at 21% seems reasonable, seems steady state.
Sorry, despite the war on waste and this, focus on keeping OPEX constant, now you guys are saying that, it's more like a 21% going forward EBITDA margin, which is perhaps, move away from, what was the earlier statement in terms of cost largely remaining controlled for the next 3 years?
Sachin, if you look at over the last 3 or 4 quarters, despite substantial rollout in network, we have been able to hold our expenses in this market. Despite significant consolidation and MNP opportunities which we have got, we have been able to hold our SG&A fairly flat. So these have been offset by various war and waste programs which we have run over a period of time which have yielded results. As you will also appreciate that there are certain expenses which are semi-fixed in nature and it takes time for us to kind of work on it. It's not that our war and waste program ends, but we are seeing that the programs which we are running right now will take us a couple of quarters so that they start yielding results. So as of
I think one other question, one other point, Sachin, to make in addition to what Badal was saying is that our minimum ARPU plan that we've launched across the country now should see a significant reduction in SG&A as well. I mean, that's one of our ambitions, so let's see how that plays out. But certainly, it should do 2 things. One is it should reduce the amount of marginal customers and get a minimum ARPU from them. And secondly, it should reduce the amount of activity in the market and all the rotation that you see, which is a function of the SG&A cost.
Okay, got it. Thank you.
Thank you very much, Mr. Salgaonkar. The next question comes from Mr. Srinivas Rao from Deutsche Bank, Singapore. Mr. Rao, you may ask your question now.
Yeah, hi. Thank you very much. 3 questions, if I may, please. First, if I look at your customer base, and I think we have a slightly newer file which was sent some time back, but broadly speaking, when you acquired or when you were in the process of acquiring Telenor and Tata's, broadly they had a subscriber base of 70-odd million. I'm kind of rounding up here. How much did actually, you end up with in terms of active subs? It will be helpful to get a sense. And this quarter we have seen your overall subs have not gone up. Is that on account of the minimum ARPU plan which was alluded right now? So that's my first question. Second, in terms of the homes passed on what you have indicated, I mean the current homes passed are almost 50% of the current subscriber base of the home broadband. So should we expect a rapid increase in the subscriber base on the home side over the next say 18 to 24 months? That's how this business typically tends to work. So any feedback on that would be helpful. Finally, on Africa, Niranjan, thank you very much on the increased disclosure. It is really useful. If I may ask 2 questions. First is your margins in Nigeria are fairly robust. They're almost at 41%. Even though your revenue share gap with the leader is fairly significant, the margin gap seems to be a lot lower. So any thoughts around that would be helpful. And secondly, on an overall Africa basis, your margin improvement over a 6-8 quarter base has happened. Half of that has come from access and half has come from SG&A. So can this trend continue? I mean, on access, I believe it would be because of rising share of data revenues, but any feedback on the margin trend or cadence would be helpful in Africa. Thanks.
Yeah, so I think let me take the India side first. I think on the customer base, we have 332 million customers, and this 332 million customers, if you see, there's a decline of about close to 11.8 million in this quarter. Much of it is the cleanup of the Telenor base. The definition of the customer that we look at is on a 30-day activity, and that led to some reduction on the Telenor side. And the second was in Tamil Nadu, UP, and Punjab, where we introduced the minimum ARPU plans. We saw some reduction in the customer base. So that's those are the 2 reasons for it. On the homes passed, I think you're right, which is that if you're adding a lot of homes, then we should be stepping up acquisition, which is what you've started to see in quarter 2. Having said that, you must remember that in this business, the gestation for translating a home pass into a utilized home pass is typically anywhere between 3 to 4 years. Depends on when you got in there, the state at which the occupancy is moving in high rise, which is really where our strategy is focused. It's high rise more than flatbed. So it depends on the occupancy, it depends on when the building gets ready and so on. So on a blended basis, this is about, typically if you look at the utilizations, they should come back to the levels that you normally have on the base over a 3-year period.
Yeah. Hi, Raghu here. On Africa margins, first let's talk about Nigeria. The key reason is, if you see our revenue mix is most of the players in Nigeria, I think we have more of the high-yielding and high-profitable revenues, which is largely voice and data revenues. We perhaps have a lot less share on the transit and lease line revenues, which are much more lower margin. So I think that is one of the reasons you will see us having a 41%. Of course, along with our cost structure and our operating model being a little different. Overall, if you see what's happening in Africa in our revenue growth, is some big growth in both data and mobile money, both of which are growing at between 30 to 50%. And these are substantial weightage to our business. Today, data is almost about 23-24%, and mobile money is about 6%. So 30% of our portfolio is growing, and this comes with lower access charges. Voice is also growing marginally. So, and that is a big reason why you will see a swing towards net revenue being higher by about 2-3% more than even gross revenue, and that flows down to EBITDA. On the cost, you've seen the SG&A costs are actually marginally lower, but because the network and others, we've been investing very heavily on our LTE network, and that's why you will see that we have not been able to get a lot more savings on that. Thank you.
Thanks. This is helpful, Raghu and Gopal. Thank you very much.
Thank you very much, Mr. Rao. The next question comes from Mr. Kunal Vora from BNP Paribas, Mumbai. Mr. Vora, you may ask your question now.
Thanks for the opportunity. So first one on the service validity pack or the minimum recharge pack. In the 3 circles which you introduced, please, how's the initial customer behavior been? Like, are the customers paying to retain the number or leaving? And for those who are on lifetime validity, can you compel them to make a minimum payment? That's first. Second is excess charges has shot up meaningfully in India, while volumes are not really up much. Is it because of higher number of outgoing calls to Jio? And finally, how should we think about the capex beyond fiscal 19? Should we assume this level will be the minimum it will stay, or is there a chance that it can come off? That's it. Thank you.
So it's still early to give you a decisive verdict on what's happening on the minimum plans, because remember, we've just gone through one round of outgoing barring, but in 45 days, the incoming will also bar, which is in about 15 days from now. So the full impact in these 3 circles will be seen in a couple of weeks' time. Our initial results seem to suggest that there is, in these 3 circles, we're seeing some reduction in the customer base, but some improvement in the overall recharge, which is a healthy thing, because that sort of that means a smaller customer base, but a much better ARPU. On the access charges, yes, I think one of the reasons for it has been the increase in the outgoing calling to other networks, led by our strategy on driving bundles, which really means bundles are the first barometer, for the first driver of actually getting onto the primary slot. So bundles is a big focus for us, and that's one of the reasons that you see some increase in the access charges. On the capex, we'll give you a guidance a little later in. So as of now, I will not comment. Let's see how it shapes up over the next 3 months, and then we'll give you a sense. It will certainly not be higher than this number. If anything, it will be a little lower than this number, but we'll come back to you later next quarter, perhaps.
Sure. Just a small follow-up on the first one, on the service validity recharges. How does it apply to lifetime validity customers? Those customers will be under an impression that incoming is free forever, and now suddenly they are being asked to make a payment, minimum payment. So how's the applicability there?
We filed these tariffs with TRAI. These are tariffs that are filed on the basis of a minimum rental. So all of this has been filed and done.
Okay. So there are no regulatory issues on this side. That's very clear.
No.
Understood. Thank you. That's it from my side.
Thank you very much, Mr. Vora. The next question comes from Mr. Viral Shah from Credit Suisse, Mumbai. Mr. Shah, you may ask your question now.
Hi, good afternoon. This is Sunil from Credit Suisse. Thank you for the opportunity. So my first question is on your network rollouts and your capex. So while your pace of base station additions has been fairly high and steady all through, you seem to be now reaching nearly 90% of your network sites with mobile broadband sites, and at this pace, probably in the next 1 or 2 quarters, all your 2G sites would also have, mobile broadband loaded on. Given that, as you mentioned, you need to still step up on network rollouts in many places. Jio seems to be heading closer towards, it seems to be targeting, nearly 300,000 sites versus, your 170,000 that you have today. Do we expect more new network sites additions going forward, network towers, by your definition going forward, or do you think loading can still be sufficient? That's my first question.
So I think, the way that we look at rollout is we're not chasing a number. We're looking at rollout of new towers based on where we believe there's a meaningful revenue opportunity. We think that there could be a case for a few more infill sites. There could be a case for a few more sites going into rural areas. What that number is, we're still working through. But over the next 12 months, we do believe that there will be some increase in the number of towers. What that number is, we'll come back to you as we finalize the capex guidance for the year. Yes, most of these sites now are 2G sites, already have FD. There will be a requirement for more TD sites. There will also be a requirement for more massive MIMOs where we have serious congestion, some additional sectorization of existing sites, and some fiber that will be needed to fiberize some of the nodes across. So that will be the main components of the capex going forward, we feel.
So a related question to that is that so far over the last 2-3 years, your rollouts, while your capex was high with a lot of base stations getting added, it wasn't really hitting you on the cost because most of these were loading. Will that trajectory change given in light of what you just said that you'll be needing more towers?
I think I don't believe it will meaningfully change, but like I said, I think let's not get ahead of ourselves. The numbers for the subsequent year and then come back to you when we give you guidance.
Okay. Now going back to the question on your fiber rollouts and 1 million homes passed, I noticed that in your KPI Excel sheet and in your report, you still call your home broadband customers as DSL. Is that still largely DSL, very few fiber, and then is it can we conclude that the 1 million homes that you have now passed with fiber are actually not there's not much overlap with these 2 million customers that you already have?
So let me clarify. I think every new home that we're passing is all through fiber. Our existing DSL asset base has been upgraded through the vectored fiber that we introduced about a year ago. So it was a good catch. We will sort of change the nomenclature. All of that should be read as V-fiber.
Right, understood. And finally, you had, with these minimum ARPU plans, you said you kind of consciously rationalizing your customer base, but you've still seen an ARPU reduction, probably that seasonality that's driven that. After the close of the quarter, with the festive season, etc., how has your experience been? Do you think, the ARPU should come back as per seasonality, or, last couple of years, it didn't really matter whether it was seasonal or not, the ARPU kept going down? How do you see the experience going into the third quarter?
Sunil Badal here. As you rightly pointed out, this is a seasonal quarter and there is some impact of seasonality on ARPU. As earlier Gopal mentioned that there has been some down trading on account of postpaid as well. With these minimum ARPU plans which have been now rolled out nationally, we see that in some point of time, which is not in this quarter, coming quarter, we should start seeing an uptick as far as prepaid ARPU is concerned. Postpaid ARPU may still be under pressure for a couple of quarters here and there, but overall we feel confident about the ARPU trajectory moving northward positively from here on.
Okay, thank you very much and all the best.
Thank you very much, Mr. Tirumalai. The next question comes from Mr. Sanjay Chawla from JM Financial Mumbai. Mr. Chawla, you may ask your question now.
Yeah, good afternoon. Thank you for the opportunity. My first question is, Gopal, what would be your thoughts on the smartphone sales in India and the penetration that we have achieved so far? I mean, have the sales been below expectations? Are they recovering? And what sort of a unique smartphone user base one could expect, let's say, by 2020? That's the first question.
So we're adding about anywhere between 10 to 12 million smartphones a month, which is around 100 to 120 million smartphones. About 25 to 30 million tend to get damaged, so those don't come back into the system. But about 90 to 95 million phones are getting added onto the system through a combination of new phones and hand-me-downs of existing phones. So today, if you look at the smartphones, they are in the ballpark of about 300 million, 310 million. So if you look at it, let's say a year out, which is October of next year, there should be close to 400 million. And if you're really seeing 2020, then there should be close to 500 million is how we see the trajectory moving. While it has some... Sorry?
No, sir, sorry, go ahead, please.
So that's the trajectory at which it's moving. The unique devices in India, while there are about 1 billion odd SIMs, our estimate is the unique devices in India will be more like 750 to 800 million. So if you take that number, then we are at a penetration of about 35%. But if you take the overall SIM number, then your penetration is lower, substantially lower. So that's the trajectory at which the smartphone segment is moving. So the other question, the other fact to point out is that if you take the revenue from smartphones, then that's much, much higher than the percentage of customers from smartphones. So that 35 number would play to probably around 65 to 70%. Okay,
and the 400 to, getting to 400 million next year and then 500 million, say, by 2020. Is there any expectation of smartphone ASPs or prices, entry-level prices coming down? Or is it simply, upgrade and income growth which will drive that?
But Sanjay, the ASP should be in the same ratio as we have today. I don't think we'll have a significant change in the ASP trajectory for smartphone sales in India. There will be people who will want to keep on upgrading, but there are many people who are there in the feature phone or VoLTE phone who would want to upgrade. So almost every ASP band will be relevant, at least for the next 3 years in the country.
But we don't see any decline in the entry-level 4G smartphone prices from here?
I would say that, it's interesting that if you take the mix of smartphones, the largest segment is not in the, let's say, 3,500, 4,000, 6,000 rupees. The largest volume is between the 6,000 to 10,000 rupees. So there is a segment there are entry phones which are at 4,000 and 5,000 rupees. They're largely Indian brands, but you don't see them as big as the ones between 6,000 to 10,000, which is led by Xiaomi, Oppo, Samsung, Vivo. Those are the brands that are the biggest ones. If one of these brands were to bring the pricing down from 6,000 to 5,000 and 4,500, yes, then that could be another opportunity for them to actually accelerate the adoption. But our sense is that that's not happening as we speak.
Okay. Thanks for that. And the second question is, you mentioned about the shift of 900 reforming to 4G. So what would be the penetration, of 900 in the current device base? that you have in 4G? And incrementally, where do you see this penetration of 900, be in terms of the range?
I think most of the devices today are already 900 band compatible. In fact, we have just concluded the refarming of 900 band in Karnataka, so all our sites in Karnataka are now 4G ready on 900 band. With the exception of Xiaomi, where they don't have the 900 band chipset, we're working with them to try and see, to get those devices also with the 900 band. Vast majority of the manufacturers already have 900 band on their chipset. And Xiaomi also has a plan to actually move it. So it's just that the existing stock of devices don't have it, and that's the challenge.
And in the existing stock of the 4G devices in your network, I mean, what would be the percentage, penetration of 900 devices? On data side, very high. So I don't have a number offhand, but I would imagine this would be upwards of 80%, 80 to 90%. On the VoLTE side, a little lower because that needs an upgrade cycle that kicks in on that particular device. Okay, got it. Thank you very much and all the best.
Thank you very much, Mr. Chawla. The next question comes from Mr. Ravi Menon from Elara Securities, Mumbai. Mr. Menon, you may ask your question now.
Hi, thank you for the opportunity. A lot of my questions have been answered, but just wanted to get into those access charges a little bit more. So the voice minutes, we've seen an increase of just about 1.3% QOQ, but access charges have been up nearly 10%. So does this mean a significantly higher proportion of our calls are now outgoing?
Ravi Badal here. Yes, our overall access charges are on account of two. One is on the mobile side. What you are saying is absolutely right. Our outgoing off-net percentage has substantially increased in this current quarter, and which has led to higher access charges. And also we have seen some access charges increase in our wholesale business under the enterprise segment. So both these put together have seen some overall increase in the access charges.
Right. And would this increase in the enterprise segment be a seasonal phenomenon, or should we expect that this is more or less permanent?
No, I would say it will be a seasonal phenomenon. There is some volume uptake, but not too much of variation to a month.
All right, great. Thank you, and best of luck.
Thank you very much, Mr. Menon. The last question comes from Ms. Sharon Chen from MetLife, Hong Kong. Ms. Chen, you may ask your question now.
Hi, thanks for the opportunity. Just a quick question on the status of the Infratel Indus merger and also whether you've been having discussions to potentially sell stakes after the merger completes.
No, nothing as of now. The only focus we have is to get the merger through, and that's what we are working on, so nothing to report.
And still on track to complete by March next year?
That's the plan, yes.
Okay, thank you.
Thank you very much, Ms. Chen. At this moment, I would hand over the call proceedings back to Mr. Nilanjan Roy for the final remarks.
Thank you, everyone, for joining us on this call, and look forward to seeing you in the next quarter.